Heidi ho, everybody. Hope everything's going super duper well in your world. Today, we're going to continue with mortgage interest rates and to basically understand what they are now. It's always good to take a look at the historic view of what they were. So, if we click on this link here, we're brought to this chart that track the interest rates, the annual mortgage rates for a 30-year fixed mortgage from 1971 to 2019. So what's nice about this chart is if you just move along it, it tells you what the interest rate. So the average rate in 1971 was 7.54%. So when we're talking 2 and 3 and 4% mortgage rates, and we see with the variety when we put it in, what it does to not only our monthly payment, but more importantly, what it does to the amount of interest we pay at the end of 30 years, you can imagine what a 7.54 interest rate would leave a buyer with and how much extra interest they're paying. And then the terrible thing is what happened in the 80s as you watch this thing rise and rise and rise. It peaked in 1981 at 16.64% interest rate. The housing market stalled at this point because people could not afford to buy homes at that rate. Go back into your mortgage table and go ahead and put in 0.1664 and see what the $180,000 house would cost per month and then how much they're paying back in interest. It was unbelievable. So when people aren't buying homes, the economy stalls as well because usually people are trying to save then to buy a home. So they're not going on vacation. They're not purchasing anything extra. They're saving everything they can, and now everything else stalls. If you can get people buying homes and get those rates down, the economy picks up. Look at 1983, 13.24%, still very high. And then it starts to come down, right? 86, it's at 10. So now you start getting more people. And then you get this again, 7.31. It finally returns to the 71 price in 1993. Shoots up for a little bit, and then we've been going up and down, but we've had this really nice downward slope. So that in 2012, it's at 3.66%. And we have been lucky to be in this zone for the last few years. What's it going to turn into? We don't know. You just hope it would never go back to that. So again, understanding where we've been kind of really helps us know how lucky we are essentially right now for the rates that are out there. And that's why you're encouraged to refinance or purchase at this point in time. Okay, so what we are going to do is actually research these different banks here, looking to fill in this chart. And you're going to have 2 days to do this. You're going to be given both Monday and Tuesday to get through looking at the different websites and filling out the different information. So, to review really quickly, here are our definitions. We're going to be looking up the mortgages for a 30-year fix and a 15-year fix. And that's what we've been working with. So, I think you're pretty familiar with that where the 30 year is the most popular, but the 15 is the best option financially. Then you're also going to see a lot of mortgage companies offering a VA loan. And what that is, it's a $0 down mortgage option issued by private lenders and partially backed or guaranteed by the Department of Veterans Affairs. To be eligible for a VA loan, you or your spouse must meet the basic service requirements set by the Department of Veterans Affairs, have a valid certificate of eligibility, and satisfy the lender's credit and income requirements. So these are for our servicemen and women that they have access to this. USDA, some of them you're going to see that. That is also a loan that's zero down payment mortgages for rural home buyers. So this is to encourage people to buy homes, with land basically, not in the suburbs or the city. They're mainly for borrowers who aren't wealthy and can't get a traditional mortgage. Even though these rates might be good, still your 15-year fix is your best option financially because lots of times these are over 30 years and you run into the same issue as you do with the 30-year fixed mortgage. A 5-in-1 ARM, as we learned in our notes, is adjustable rate mortgage where it stays solid for 5 years, and then it starts to adjust every year after that with limits placed on it. And then the 10 and 1 arm, the adjustable rate where it's fixed for the first 10 years, and then every year after that the loan can adjust until it's paid off. And again, it can only adjust to a certain high of a ceiling. But these are options if you know you're going to sell your house within 5 or 10 years, and only if this rate is better than the 15 or the 30. Okay, so let me walk you through the first one. Now, here's the issue, and we kind of ran in this when we looked up interest rates for our cars. We did this back in, I want to say October, November timeframe. We looked up car loans. We looked up, I think we even looked up some home loans. We looked up investments and savings accounts and such. You're going to find that certain websites, it's a lot easier to get the information than others. You're going to have to be good researchers. And if you want to partner up with somebody to work through it, I highly encourage that as well. So if you know somebody else in any one of our classes, go ahead and work with them together. Right? Usually two heads are better than one, and you can help fill this chart out with each other. So I'll do SEFQ. So what you're going to do is just go to Google, type in SEFQ mortgage rates. And when you do, you get brought to this screen. So I don't necessarily like the way SEFQ lays out their information, but again, this is what you get. For some reason, okay, so the big thing to be aware of is we want the APR. This is breaking it down into rate, points, and APR. So we're interested in the APR price. SEFQ has 30-year fixed rate conforming, which is what we want, but then it says it again, 30-year fixed rate conforming. And I have no idea what the difference is between the two of these. It's not indicating what it is. So if we run into that with other banks, just always take the first one. So I'm going to take this first one. So the 30-year fixed at SEFQ is 3.371%. So you just come back to the chart and put in 3.371. It's already formatted as a percentage. But we do have to increase the decimal so that I can see the whole thing. So don't forget to increase your decimals if needed. All right, going back, there's the 20-year fix. We talked about, Mrs. Clarkson talked about it in our notes on Thursday, but we're interested in the 15-year. And again, oh, they only give us one of those. Okay, so the 15 year is 2.667%. So 15, 2.667%. Again, it's formatting it to two decimal places, so just increase your decimal place. Okay, next up, they have a 10 and 1 arm. So their 10 and 1 arm is 3.534. 3.534. I'm just going to highlight this whole table and make it 3 decimal places. And if I have to go to 4, I'll go to 4. In the 5 and 1 arm, 4.025%. All right, the FHA loan, that stands for first time homeowners. Basically, that you have access to that where it requires less to be put down. Most banks expect you to put 20% down on a house and then borrow the remaining amount so that they know you have some solid skin in the game. So if you're a first time homeowner or you are don't have the greatest credit score, you might be able to get one of these loans and it'll be at a higher percentage rate. But again, you establish better credit, you get moving along, you can always refinance to one of these others. Okay, here's the VA loan, 3.203%. And as you can see, still the 15 years, the better rate. And there's the USD. We're not tracking that one, but that's at 3.709%. Okay, now depending on the banks, they might not offer, they'll offer the 30 and the 15. Some banks might not offer a VA. Some banks might not offer a 5 and 1 arm or a 10 and 1 arm. If they're not offering it, then what you do is you can just put an X in that spot. That's all it is. It just means that, yep, this bank doesn't offer that option. And again, that's after some research. So you're going to kind of research, put out like SEFQ, 5 and 1 arm, see what comes up. Okay, now we have to go to the home equity loan. So let's see what SEFQ's home equity. If you notice in this section here, it doesn't have the home equity loan. So I'm going to go Google SEFQ home equity loans. There it is. Fixed rate home equity loans. And that's what we want, the fixed rate ones. So I haven't been to this website yet, so it might take me a bit to find it. Fixed rate home equity loan, approximate payment terms. So we'll go with the lowest one that they have, the 5 years. And again, depending on the bank, just always choose the lower one if they break it down this way. So for the home equity loan, it's going to be 2.45%. I'm going to go back to my chart and put 2.45%. And then I'm going to put in parentheses right behind it 5 years to indicate how long I have for that one. And again, home equities can vary. So you can kind of just put the leftover details in there. And if you need to widen the column to get the information in, you can. You're more than likely, welcome to do so. Okay, you're going to continue on looking up the rest of these banks and filling in all the chart information. And then when you're done, you're going to look at each item and indicate which bank has the best rate. So which bank had the best 30-year fixed? If you were going for that, who should you use as your lending institution? Which bank has the best 15-year? Which one has the best VA? And so on. Who's got the best 5-and-1 arm, 10-and-1 arm, and then who's got the best home equity loan? Let me just show you Sunmark's website. I looked this one up, Sunmark rates. What's nice about Sunmark, when you go to current rates, see theirs is broken up. I think they have a pretty good organized site. And again, every bank is different. So they break it up. Here's their mortgages. Here's their home equity loans, their vehicles, and so on. So when you click on it, you actually get the chart for the mortgage types. And if you notice, they don't have a 5-and-1 arm listed here. So go and do a search or call the banks. That's the other thing. You can call them up and say, hey, I'm in a math class called financial algebra, and we're researching rates for a project. Can you tell me if you offer a 5-and-1 arm? That's it. Some people like to make phone calls. It's easy to get the rates, the current rates. And just say you need the APR. Oh, wait, I wanted to go back into that for 1 minute. And then when you needed, for this one, this is where you would go for the home equity loans. They have up to 20 years. So that's what you would put down, 3.99%, and then in parentheses, up to 20 years. So you would put that information in here. 3.99%, parentheses, to 20 years. Just get rid of that percent on the end. Okay. All right. If you have any questions, sign into your Google Meets. Your teachers will assist you and help you. Again, you have both Monday and Tuesday to complete this entire assignment. Questions, let us know, and have a great day. Chat with you soon.